Yahoo Finance's Heidi Chung is joining us now to talk about the stay-at-home stocks, the names that have weathered coronavirus. So Heidi, one that everyone has been talking about is Zoom teleconferencing, under the theory, I guess, that if it really gets worse, a lot of people won't be going into the office.
Right.
They'll be teleconferencing. So talk to us a little bit about Zoom and then some of the other names that are in this thesis.
Okay, it has been a crazy week, as you guys know, for the markets. So as of yesterday's close, the S&P 500 was down 10%. So relative to that performance, these stocks, this group of stocks, have outperformed. So when we take a look at Zoom, you're
Even
absolutely
though we see
correct.
red right now. I'm glad
exactly,
you gave that
but
caveat,
relative
yes.
to the S&P 500's move over the past week, Zoom shares are up a whopping 11%. And that is because, like you mentioned, there are people in voluntary quarantine. There are people actually being quarantined by direction of their companies that they are working for. And so they have to find a way to communicate with each other. And teleconferencing, video conferencing is huge. This company was actually doing fairly well even before the coronavirus.
One of the few unicorn IPOs that went well.
And it was a profitable company when it IPO'd as well. So this company was actually doing fairly well. But a lot of people have been joking about this on Twitter. But the Netflix and quarantine comment, Netflix actually outperforming as well, though it is down 4% over the past 5 trading sessions. It's outperforming the S&P 500. A lot of people staying at home, watching Netflix as they sort of wait out this coronavirus situation.
And what's funny to me about that, weeks ago, there were headlines saying that coronavirus could boost Netflix stock. And it looked like a stretch because also, big caveat here, Netflix not in China.
Yeah.
Now Netflix is in other countries in Asia. But at the time, that seemed like a stretch. Now you really are seeing it, unfortunately, but interestingly for Netflix, as it has spread. Now, one note on Zoom that's ironic to me, it isn't as though Zoom is the only company that has video teleconferencing. I mean, there are companies where if you have a meeting with someone over video, you could use a different provider than Zoom.
Absolutely.
So it is sort of funny to me, the idea that, Zoom should pop big because of people not going into the office.
No, yeah, and I want to actually touch on a point you just made a bit earlier, that being that Netflix isn't actually in China, but the Netflix of China, iQIYI, is, and that actually also got a boost over the past week as folks in China were staying home. But also in addition to those names, you have Peloton, of course, the at-home fitness company, people not really leaving their homes, working out at home. Whether that is really the case, we did see the stock outperform the S&P 500, the broader market. So, these are sort of the bright spots. When we're talking about Netflix, though, it's actually the third best performing NASDAQ 100 stock over the past week, right behind Regeneron and Gilead. And of course, those two
Which
stocks
might not be saying much. But.
Right. They're doing pretty well because they're working on that possible vaccine. But Netflix actually holding up relatively well. As we know, Apple and Microsoft were not faring so well.
No.
Yeah.
Do you buy this theory, you guys? I mean, because another name was, I said Bunker, and another name is
I would say
Clorox.
Clorox. Oh,
Clorox,
I want to know how Clorox is doing because I stopped
outperforming
bleach. I mean, look.
Clorox is outperforming 3M. Of course, they make masks. That's not a big part of the revenue, but they do
that makes more
make
sense
it.
to me. Okay.
So those two companies as well outperforming.
How's Campbell's Soup doing?
Outperforming too, I believe. Yeah. So a lot of people sort of stocking up. Everyone's saying that you need at least 14 days worth of supplies in your home.
That much in my apartment.
But regardless of the coronavirus, they're saying you should be prepared for any kind of situation.
Right.
So
all of the doomsdayers, the doomsday preppers, right? Isn't that what they're called?
I did stock up on some mac and cheese, so
sure.
That and vegetarian chili.
I think the panic can get to a certain, at least here in the U.S., we're just not nearly.
In Asia as
People
well.
Are going out to restaurants. It's okay. It's.
You know how Grubhub has
concerning,
been
but it's okay.
Super underperforming. So I thought maybe right about now it would be outperforming.
Food delivery apps, yeah.
Still underperforming the S&P 500, but a lot of people are saying delivery should get a boost because people aren't dining in restaurants anymore.
Well, Scott, we were talking about at least here in New York. I mean, you're not seeing that yet. People are going out to dinner.
Yeah,
I'm not saying let's not go out tonight because
if you didn't know what was going on, you wouldn't know what was going on. But the companies you talked about, it is so difficult to trade around an exogenous shock like this. And the companies you mentioned are great companies. Zoom has, I think, the best product. So yeah, we are undergoing the largest work-at-home experiment in history. But they're generally, I think their product is just superior to Skype's or Cisco's. Peloton has a fantastic vertical. It's the most Apple-like product in connected fitness, 38 points of margin. Those are like Apple-like margins, recurring revenue, 20% from their app. So there's a lot to like about Peloton. And I wonder if what we're seeing here is just people want an excuse to take great companies up and take shaky companies down. But yeah, the work at, Clorox is a great company. So it'll be interesting to see if it gets way out of its trading range. But I'm shocked about, but just the notion of how difficult it is to trade against these things, these short-term things. I would have thought all biotech would be up.
Yeah.
And we see today that some of the biggest losers. So the advice to your viewers who tend to be on the younger side is buy great companies. To trade in and around exogenous shocks, that's gambling, and that's really difficult.
Buy great companies, i.e. Warren Buffett. I mean, that's been his thesis always. We're not talking brand new wisdom here, you know? Buy and hold. Big blue chip American companies.
Campbell's was one of his names, right?
Right. All right, Heidi, thanks so much. Keep watching all those names. Really interesting.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.